So in last night's video, I made it very clear that if the SPY drops to 581 and we are seeing a strong 30-minute candlestick confirmation to be buying call options, I'm going to be buying calls at that specific level. In terms of the day, SPY was basically selling off for 2.5 hours straight from market open. Then we began to have a very nice reversal. Once we dropped to 581, it was the exact lows on the day for nearly 2.5 hours. Many dip buying opportunities at that level that I gave you, and it was literally the exact lows. With that being said, I did end up buying SPY call options multiple times at that levels. The first trade that I made on the day was over a 50% return, buying call options at the exact lows. I made it very clear in the video, since it's the higher level and not 579, that I will be using a strong confirmation on the higher level. And if the confirmation does not trigger, then simply wait for the lower level. In terms of the confirmation that I used on this trade, and then after we break this down, I'm going to get into the new money-making game plan, right? Because you really got to ask yourself, who do you know is giving you a game plan that gives you literally the low of day a day before in advance, and then trades in real time using the confirmations that I'm teaching you? Because the way I'm trading is exactly what I'm teaching you, right? So in terms of this level, this was the level where I told you to buy call options. As you can see, that level reacted as the low of day for over 2 hours straight. In terms of the 30-minute confirmation that I ended up using on my first trade of the day to buy 582 SPY calls at the exact lows for 40 cents a contract, and then average my cost down at 36 cents, 38 cents, 37 cents. I ended up sizing in very nicely on this overall trade. I was extremely confident in my game plan and the confirmation that I was seeing on the 30-minute chart. And I did end up selling the exact peak on this trade at 57 cents. And I did end up having many great ads on this overall trade. With that being said, why calls? What was the confirmation? Well, in terms of the foundational piece, I'm not going to be going over the reasoning on behind the daily chart. You have to go back and watch the plan and watch the previous video before. In terms of this right here, you can see there's previous resistance at 580.60 to 581. The SPY had a gap up and a gap and go above that previous resistance. If it drops back down, it could potentially be a breakout and retest where the SPY breaks up, or the SPY gaps up above this resistance level. When it drops back down, it could potentially bounce first. Now, how did we confirm that? In terms of the confirmation, this was the pattern that I saw on the 30-minute chart. I compared the price and I compared the 30-minute pattern from Friday to today, and this is what I ended up seeing. So as you can see right here, we have a red, green, triple slanted red pattern. What happens after that third slanted, red pattern to the right side, right? You can see right here, next 30 minutes, it has a small drop under the previous 30-minute candlestick, and then it has a green bullish move to the upside, right? So in terms of this overall pattern, you have a red candlestick right here, you have a red candlestick right here, you have a green candlestick right here, you have a green candlestick right here, you have a red candlestick right here, you have a red candlestick right here. And then as you can see, red, green, red, and then as you can see, red, green, red, and then take a look, 3 slanted red to the right side, 3 slanted red to the right side, 3 slanted red to the right side. Where is it bottoming? It's bottoming at the previous resistance, 580.60 to 581. It has not been tested yet, so it's going to try to bounce first. In terms of that pattern on how it reacts in the next 30 minutes, the SPY dropped under the previous 30-minute lows, and then this candlestick right here was a green and bullish, which is how I came up with that thesis in terms of the confirmation that this 30-minute candlestick right here, the opening at 12 p.m., was going to be bullish. And then in terms of getting the best entry, the history shows in terms of the pattern, this is going to be a strong green bullish 30-minute candlestick confirmation. So you can take starters at the opening. And then in terms of where it can potentially bottom, slightly under the previous 30-minute low, slightly under the previous 30-minute low, previous resistance right here reacts to support. Do you see the way the market that I see, on how I see it? Because that's exactly how I saw the market today, man. We absolutely crushed it, man. You really got to ask yourself, who is doing that, man? I was watching the market the whole day. I had a solid game plan. We ended up buying these call options at the exact lows. I give you the best level possible, man. I was watching the market all day, man. This was just sitting here for 2.5 hours crashing. And then I said, dude, this is a perfect confirmation. There's a pattern on the 30-minute chart that has been repeating for 30, 60, 90, 120, 150 minutes. 150 minutes of a pattern repeating. Don't you think that it's going to repeat for another 30 minutes, especially since this previous resistance is likely going to react as support, basic supply and demand, basic breakout and retest, gap and go retest overall strategy, right? It gave it all away, man. Drop under the previous 30-minute, buy call options, green bullish 30-minute candlestick confirmation. So simple. But you really got to ask yourself, how many people trading the SPY today saw it the way that I saw it, right? How many chose to wait to buy call options at the exact lows? So I give you the plan. I teach you the patterns. The same patterns are going to continue to arise within the market at my levels. I'm telling you, this works nonstop, man. And I talk about this all the time. The 3 slanted red pattern, 3 slanted red candles to the downside. If it's slanted to the right side, right? And then if there's a reason to be buying calls on the opening of the next 30 minutes, it could be due to a key level. It could be due to the daily chart confirmation that I gave you in last night's video, along with the reasoning on why this was a key level as well. Previous resistance to react to support. Buy calls. This gets very advanced. You got to be able to see the market. You got to be able to trade the chart. So that's why I ended up buying those calls at 40 cents a contract at 11:56 a.m. And I kept on adding in terms of scaling in and adding to the losers. I didn't want to miss out on the trade, so I got in like right away as this 30-minute candlestick was closing like this. And then I knew, based off the history, if it starts dropping under the previous 30-minute lows, that's the best entry possible. I could have waited for that to happen, but if it didn't happen, then I would have missed out on the play. And I don't want to miss out on this big green bullish candlestick, so I kind of just gradually scale into the play. Meaning, if the SPY is close to this 30-minute low, I'll just kind of hop in calls, right? And you can use 1 minute and 5-minute confirmations. That's where it gets more advanced. But you don't even have to do that in a sense. The 30-minute candle is supposed to close green and bullish, and it's telling you exactly where it's going to try to bottom. So you can kind of get in towards this low, and when it starts to drop under that low, you can scale in gradually. You don't have to take full size if you don't want to. But it just made sense for me to get in basically right when this 30-minute candlestick was about to close red and bearish, because I knew next 30 minutes was going to be bullish likely. I was going with the pattern. I was going with the level. I was going with the foundational daily chart piece, right? So in terms of that trade, those 582 calls, as you could see, I got in at 11:54 a.m. Everything it is that I'm doing, I'm alerting in real time, 11:56 a.m., right? 11:56 a.m., 582 calls at 40 cents a contract, right? So in terms of this overall trade, I ended up getting in at the exact lows right here. And then as it had a small drop, I was scaling and I was adding. Once it had a small pop, I added as well. And then I sold the exact peak, man. Look at this. I'm getting at the exact lows and I'm selling the exact fucking peak, man. Who the fuck do you know is doing this? Do you understand? There's levels to this game, man. Who do you know is getting out at the exact peak? 12:22 p.m. I sold at 57 cents a contract, man. Look at this. We have members in at 35 cents. They got out at 55 cents, man. That was the best trade that you could have made on calls all day. And that was the first trade that I ended up making. And I planned it the night before, man. That's who the market's going to reward. It's going to reward the person who plans the day before and who sticks to the plan and uses a confirmation at the overall plan. So in terms of that trade, I sold the exact peak right here, and then I got back in. Once it dropped back down to my initial entry, I got back in. Look at this, man. I got back in for another fucking win. It is nonstop winning over here. So I ended up rebuying 582 calls at 37 cents a contract. As soon as I got in, it had a quick drop. People were getting it at 31 cents, 34 cents, 26 cents. Now, with that being said, I ended up, again, selling towards the exact peak. I got out at 49 cents a contract at 12:46 p.m. This is where I got out, right here at the exact fucking peak. And then it dropped right back down, right? So I explained to you the reasonings in terms of the call options. In terms of my overall day after that second win, I repeat this all the time, but I had 2 wins in a row, and I made it very clear within the chat. We just had 2 wins in a row. Everyone should be more than green enough to call it for the day, right? So if you choose to continue to trade, at most, you risk half of your gains. And then if you risk half of your gains and you end up losing half your gains, you have to force yourself to stop trading, because we're not going to risk going green to red. 2 wins in a row means losing is a choice. And 2 small wins in a row also means you should be more than green enough to call it for the day. But these were decent wins, so all you really needed was the first trade to just walk away for the day, right? And then if you choose to continue to trade, you risk 25 to 50% of your gains at the most. So that's that. Now, in terms of the power hour trading session, I did end up having 2 L's on SPY calls. I tried the level again. It didn't have the best confirmation and it was already played out, but I used a daily confirmation in terms of what I was looking for. And the daily confirmation simply didn't work out in terms of the power hour trading session. It is what it is. I had 2 losses during the power hour trading session. And then I had 1 nice quick win on the last trade during the power hour trading session. So in terms of the overall day, with Risk Management 101, this was a phenomenal trading day. Now, with that being said, In terms of the new game plan, this is going to be the new game plan. It's going to be very simple, man. So based off of this daily chart pattern that I'm seeing on the SPY, at some point in time this week, it is going to attempt to test the high of this wick. We have a wick right here on the daily chart at 584.50. So it is going to attempt to spike back to that wick. With that being said, based off the daily chart pattern, if the SPY gaps up, if we are opening up higher than the previous closing price, 580.83, then I am planning to buy call options towards the opening. I am planning to buy call options towards higher resistance levels. In terms of the higher resistance levels that I will be looking at, if we are gapping up, the first level is going to be pre-market resistance. Wherever the resistance is in the pre-market, if the SPY breaks above it, I'll wait for it to drop back down and retest. And if we're seeing 30-minute candlestick confirmations to be buying on the break and retest confirmation, I'll be looking to buy the dip towards that new pre-market level. In terms of other levels, as you can see right here, we have resistance at 581.20 and we have resistance at 581.80. So those resistance levels, along with pre-market resistance, I'll be looking to use the gap and go strategy, the breakout and retest strategy, right? Based off the daily chart pattern, if the SPY gaps up, opening up higher than 580.83, it's likely going to be a situation where you're going to want to get in on call options earlier towards the higher levels. And it's likely going to be a gap and go. So in terms of that overall pattern, I've analyzed on how SPY reacts in terms of like similarities. You can see right here, this is kind of like a similar pattern, how it's just like crunching up to the right side, crunching up to the right side. This daily candlestick is nearly identical to this daily candlestick, right? It looks exactly the same, except this day it's just a little bit bigger, has more price action. With that being said, next day it ends up gapping up, doesn't even go back down to the previous closing price, and it ends up having a very nice green day and then a small little drop. With that being said, if we gap up, it's likely going to be a gap and go. I've looked throughout many times. You can see this daily candlestick right here looks very similar to this daily candlestick, and it has that similar like slanted crunch to the right side, slanted crunch to the right side. Also, we're just due to test this wick right here as well. And as you can see, the SPY gaps up and it just keeps on running up, right? So I went back throughout the chart history, and if it does gap up, is bound to just keep on happening. This looks very similar right here, gaps up the next day, and then it tries to close strong towards the highs, right? So just pay attention to that pattern. That would be the true best setup, where if the SPY is gapping up tomorrow, here we go again, right? You have the same daily candlestick right here, SPY gaps up, has a very strong move to the upside, right? And you can see the candlesticks on the daily, they're not closing exactly strong at the highs. There is a small pullback throughout the day. But in terms of that overall pattern, that's the one I'm seeing if we do gap down. Now, in terms of other patterns that I did want to bring awareness to, because when I'm looking at the daily chart, sometimes I'm seeing multiple patterns, and that's where it becomes a bit more complex. If you're seeing multiple patterns, you come up with multiple different key levels, and then from there, you have to use very strong confirmations. The confirmations have to be very, very strong, especially if you're seeing multiple patterns. But if you're seeing multiple things that can potentially happen, one way to truly be able to figure out on which one is going to happen is just kind of let it happen at first. Like sit out during the market open and just let things play out. And then once you kind of start to see which pattern is actually developing, waiting later on throughout the day is really going to help give you that answer. But there is ways to find the answers before. And that just comes with everything it is that I've been teaching you and stacking it all together, right? Like we discussed with the 581 level, there was a daily chart foundational piece, and then we had the gap and go, then we had the breakout and retest, then we had this 30-minute pattern that was repeating for like 150 minutes, right? So there's many things that come with reading the overall market structure and the supply and demand. But anyways, man, you can see here it is again, same daily candlestick pattern, and then SPY gaps up. So I'm telling you, in terms of an easy fucking day, if this gaps up, it's just going to be buying call options on the dips towards market open. You know, if you're seeing a green bullish 30-minute candlestick confirmation in the pre-market, you could just get in, especially if it's not towards like an overbought resistance level. If we're under like 581.70 ideally, just really look to buy the dips if we're gapping up towards those breakout and retest levels that I gave you, along with pre-market resistance, right? So the main pattern that I'm seeing is the gap up situation. You could see in terms of, more daily chart patterns. Let me see right here. So this looks a little similar in a sense. You can see you have this red candlestick to the downside, red candlestick to the downside. That's identical. What's not identical is, the next candlestick right here, next candlestick right here. Not exactly identical in that situation, right? But one thing I do want to point out, with that being said, is just simply by looking, if we go back to that, if we are dropping under the previous closing price, there will be a plan to buy calls at the oversold levels. So in terms of oversold levels, is mainly going to be this, man. I have three main levels. We have the gap 579. So I'm very interested in buying call options at the gap at the 579 level. The next level below that I'm keeping an eye on, you can see right here, we have pre-market support that has not been tested yet. Since these levels have not been tested, they are likely to bounce first, but it is wise to use a confirmation as well. If you want, you could take some starters at first and then scale in once you have a 30-minute confirmation. You're always going to be most confident when you get those 30-minute confirmations, unless it's like an overreaction move that happens extremely fast. Those tend to work well for reversals when they test for the first time, right? So the gap hasn't been tested. We have a very strong pattern of the SPY reversing at the gaps. This support has not been tested at 577.50, is due for an overall bounce. The lowest level below that is going to be 574.50, which hasn't been tested, right? Based off of what I'm seeing on the daily chart, we're not really going to be dropping that low heading into tomorrow if it does flip a little bit bearish. So the main play, if we do kind of flip a little bit bearish, is going to be that keep an eye on this, 577 to 570.50 zone, and then keep an eye on the 579 gap reversal zone, right? Because I already told you, I'm seeing like multiple things on this overall daily chart. You can see right here, just again, man, that gap up pattern. You have these four red candlesticks slanted to the right side, and then this red candlestick looks identical. Next day, it gaps up, very strong bullish day. And then you're going to see right here, you have these four slanted red candlesticks, right? And then very similar candlestick right here. So if we're gapping up, man, that would be the ultimate easy money play for that gap and go. If not, it's going to be a little bit tougher to find that entry. Like I said, just waiting throughout the day can really help in that situation. But that's the main plays that I'm truly seeing, man. So I'm telling you, keep an eye on the oversold levels. If we're reacting bearish at that 580.80, if we're not gapping up, keep an eye on the oversold zones. 579 gap reversal, 577.60 support that has not been tested, could potentially bounce first, nothing true special. And then you have a very oversold level here at 574.50, right? So if we're not gapping up, just keep an eye on those dip buying opportunities. But if we're not gapping up tomorrow, the main play that I'm seeing is the gap reversal at 579. And then this strong support zone at 577.60. And if those just aren't working out, the next support level is 574.60 to test. Based off of what I'm seeing in terms of a day in advance, I'm really going to be focused on buying call options. That's just going to be the main play, right? So just keep an eye on that. I do have a bit more of a bias in the situation that I'm seeing on the daily chart. But what I would encourage you is this, man. Just make sure that you use strong confirmations if we are not gapping up. Like I said, if we're not gapping up, it's going to be a little bit difficult. But the upside is if we're not gapping up, SPY has been reversing at these gaps nonstop. So, part of trading is just about putting the statistics within your favor, but you have to know the statistics and you have to be aware of the trends and be aware of the patterns that are actually working, right? You have to have your third eye open and you have to actually execute on this stuff. But like I said, if you go back throughout the past 20-day, 30-minute chart, there's been a very strong short-term trend where the SPY has been reversing at these gaps nonstop, right? So you got to put your odds within the favor, and then it works until it doesn't. But that's one way how you get a high win rate in a sense. You study these trends that are consistently working, and you keep on following the trends. And then if you want a higher win rate, and if you don't want to lose, you have to use strong confirmations at these overall levels, right? But throughout the past 20 days, every single time the SPY has filled a gap, it has a short-term reversal, right? I mean, just look at all these white fucking lines. Right here, it gaps up, it closes the gap, has a reversal. Right here, it gaps down, closes the gap the next day, has a short-term pullback, right? So as a day trader, it's having short-term reversals every time it's closing the gap, closing the gap, closing the gap. Right here, it closes the gap. You see what I'm talking about, right? And then use the 30-minute candlestick confirmations, closes the gap, has a reversal, 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 closing the gap, has a reversal. This is the best strategy that you can possibly use within the market, especially for those of you who trade the chart, the gap reversal strategy. So 579, keep a very close eye on that. I would encourage you to use bullish 30-minute confirmations, right? And then the level below that, 577.50. That is going to be the game plan. As you can tell, it is mainly call option focused. That's just what I'm seeing based on, a night before. Obviously, I'm not just going to blindly trade based off the daily chart overall pattern plan. The gap and go plan is mainly based off the daily chart pattern, but we know how to confirm these overall patterns that we're seeing, right? And then, 579, that's mainly based off the gap reversal trend that has been repeating very strong throughout the past 20 days. There's no reason to go against that trend. And if you don't want to risk losing, then just use a very strong confirmation. If you use the strong confirmation, you might not get in at the best level, but you'll have a higher win rate, right? And getting in at the best levels is not necessarily 100% the best thing to do if you're not using a confirmation. But there are certain levels where you can have a strategy where you can just get in at the best level, and it tends to work the vast majority of the time. That's more advanced, but this is likely going to be one of those situations where it will likely just start to bounce at 579 to 578.50 zone for a nice little reversal, just based off what I'm seeing on that overall daily chart, right? So it's a fairly simple game plan. I'm extremely confident in the situation if we're gapping up, and I'm fairly confident in the gap as well. But like I said, man, just use confirmations, especially if we're going more towards the oversold levels. But play it safe and use overall 30-minute candlestick confirmations, and you guys should do fine in terms of trading tomorrow. Like I said, man, green should have been a personal choice for everyone. Everyone should have been green today. I don't see how anyone could have possibly went red. It was so simple. I gave you the level. This was the level. It was the low of day for 2 hours straight. I didn't tell you to buy fucking calls at 581.70 or 580 fucking 150. I told you 580.50 to 581 is the call zone. Literally lows for 2 fucking hours. Could have made all these trades. And then right here, green, red, green, it goes up. Red, green, red, it goes down. This was another confirmation to buy calls. Green, red, green at the 581 level. Buy calls on the opening of the next 30 minutes. That was another play you could have made on that particular situation, right? So I'm showing you exactly how to master the SPY. I'm showing you exactly how to trade the SPY. Like I said, this material, this is something that I've created. You're not going to see anybody else doing this unless they learn it from me. This is something that I've created. So if you're implementing it, you should be going green, man. You should be fairly going green, and losing should be a choice, man. Like I said, risk management 101. If you have a win, one win big enough, then risk half the gains at the most. 2 smaller wins should be enough to be up big enough to call for the day. And then if you choose to continue to trade, risk half the gains at most, right? And half is a lot, right? That's the absolute most. In a sense, especially if you're trading a larger account, 20 to 25%. Smaller accounts automatically, they have to risk more, but they don't have to trade more if they're already green enough to just call for the day. So if you've just been studying my overall trading as of recently, what I've noticed is the first 2 to 3 trades are just all wins. And then after that, if I keep on going, I'll have like 2 L's. But again, I have risk management 101 where I'm never going to lose more than 50%. You can literally set up a max overall drawdown and just refuse to stop trading. Just cut the overall trade. You can literally size in accordingly where the absolute most you're going to lose on the next trade, right? Because we're trading options, the most you lose is what you put in, right? So you can literally put in like 25 to 50% of your gains in the next trade. And if it doesn't work out, then you could just stop trading on the overall day. There's a lot of different strategies you can do. But at the end of the day, in order to be successful as well, you have to have self-discipline, man. You have to have self-control. If you don't have that, you're not going to be able to make it, man. You have to be self-disciplined. You have to have self-control. If you're going to sit here and try to make the most amount of money within the market, you'll be the first one to lose it all, man. So with that being said, man, have self-control, have self-discipline, and continue to trade at these overall levels. Continue to use these 30-minute patterns that I'm teaching you, man, because if you saw the way that I see the market, man, part of the way I see the market is just studying history to repeat itself, just studying trends and patterns to repeat itself, just how I view the chart. I look at the chart, I go, okay, red, green, and then you look right here, 3 slants it to the red, 3 slants it to the red, next 30-minute candle is a green bullish candle. Where does it bottom? Slightly under the previous 30-minute low, right? Red, green, red, red, green, red. 3 slanted to the red, 3 slanted to the red. How many fucking times on this channel have I said 3 slanted to the red? If there's a reason to buy call options on the next 30-minute candle, right? It could be a key level. And, we come up with the key levels using the daily chart, using 10-day, 30-minute chart. Those are the main ways, right? And then using the strategies, the gap reversal, the breakout and retest, all the different strategies that I have, right? So with that being said, there's just no fucking excuses, man. I give you the level. The pattern is blank in your face. I tell you all the time, 3 slanted red to the downside, but it's not even about that. It's just about looking at short-term patterns. This is a short-term pattern that happened at the same fucking price. Red, green, red, red, green, red. That's a pattern. 3 slanted red to the downside, 3 slanted red to the downside. If something is repeating for such a long period of time, and then there's actually a fucking reason to buy call options at 580, at 580.60 to 581, the reason was the daily chart. The reason was market structure, supply and demand. There's resistance right here on the SPY at 580.60. The SPY gaps up above resistance, it drops back down. When it hits this previous resistance, breakout and retest, gap and go and retest, gap up and retest, it could potentially bounce, right? But you have to confirm it. Anybody could sit here and fucking say, oh, there's resistance at 580.60. The SPY gapped up and broke above resistance. When it drops back down, we're going to buy calls. Those are the beginners. Those are the newbies. You have to actually know how to confirm this. And I'm telling you, the best way to fucking confirm this stuff is the 30-minute chart. I've experimented with everything. The 30-minute chart is the solution, man. I'm telling you, this 30-minute fucking chart. The red, green, red, 3 slanted to the red. Red, green, red, 3 slanted to the red. History's going to fucking repeat itself. Do you understand? It's all within the chart. Trade the fucking patterns. Trade within the chart. You can literally make up your own 30-minute fucking strategies with everything it is that I'm showing you. You have to be able to capture history in real time. You find a key level as the foundation. 580.60 to 581 was the foundation. Using the daily chart. Using the breakout and retest. Using the gap and go retest. It could potentially bounce at 580.60. That's not good enough for me to just blindly buy calls at 580.60. We need a confirmation. The confirmation was a pattern, a trend that was repeating itself in a very similar way. Red, green, red, 3 slanted red, red, green, red, 3 slanted red. That's how you need to see the market. So capture trends, capture patterns, stack that with the key levels. That's what you got to do, man. You can't just say history's going to repeat itself. You need a confirmation. But you need that level in terms of like a foundation, and then the history can help confirm it, right? So I'm just giving you some basics in terms of like how to stack all this together on how like simple this system can truly be. But like I said, these simple strategies I'm teaching you are able to get you in on calls at the exact lows. Like, I don't see the complaint here, man. I get it. It's super simple. It's super basic once you get it down. But if we're getting in calls at the exact lows, why everybody else before us is just struggling if they're just buying calls, getting in higher and losing money, like what the fuck's the problem? It's so simple. And that's how it should be. And that's how you have to make trading be, man. Once something is very simple, it's very clear to see. If it's clear to see and it's very simple, from there, it's really that, just having that awareness at all times, being aware of what you should be doing, having your third eye open, waiting for the confirmation at the overall level, and just self-discipline and self-control. And like I said, in terms of risk management, like if you have a green trade that you're more than up enough on for the day where you can just walk away, if you choose to continue to trade, you risk 50% of the gains at the very most. If you have 2 small wins in a row, you should be more than green enough on the day to just call for the day. And if you choose to continue to trade, risk half the gains, right? And just be aware of short-term trends and short-term patterns that have been happening in terms of your overall trading. Because like I said, in terms of my overall trading, what I've noticed in terms of as me lately, it's always smart to bring awareness to things that are happening for the short term, because if you let them go, they can potentially just keep on happening and these mistakes can potentially not get fixed, right? So just always be aware of like short-term trends that are happening within your trading. Like I said, I've noticed a very strong trend within my trading where like the first 2 to 3 trades have been green. And then if I choose to continue to trade, it's like 2 L's. And like I said, that's completely fine because I do have the self-control and discipline enough to risk half of my gains at the very most. If I choose to continue trading no matter what, it's completely fine. But it's just a trend that I'm aware of because it has been happening, throughout the past 2 weeks from what I've noticed. Now, the good thing about that trend is it's literally all fucking wins, starting off all fucking wins. Therefore, losing is a choice because you can call for the day. If you choose to continue to trade, then you risk half at the most, right? So worst case scenario in that situation, if you're taking the trades, then you're literally losing like 25 to 50% of your gains at the most if you choose to just keep on fucking going, which you don't have to. But having these wins starting off the day, multiple wins in a row, it makes it in a situation where losing is a personal fucking choice. So just follow the overall system, man. I'm telling you, we are absolutely crushing it within the chat. I will see you guys tomorrow, man. We will absolutely dominate the market, man. For those of you who are serious about trading alongside with us, it's going to be the first link down below within the description. In terms of what we do differently is we actually give you the plan to make money a day in advance, and we actually teach you how to trade these plans and how to trade the overall market. And I'm recapping all the trades that I'm making. You should already be able to make money and have a lot of self-sufficiency within the market, and your trading should be improving drastically just by watching these videos and implementing and taking action on what it is that you're seeing within these videos. Because I can assure you, man, this stuff works. But you really gotta wonder. I give people level, and you really gotta wonder if everyone who watched that fucking video, did they see the pattern? I talk about the 3 slanted red all the time, so they should have been aware of that. 3 slanted red, I talk about all the time, right? It's literally this trend reversal strategy that I've been using. Like, it was the perfect game plan. Resistance, breakout, 3 slanted red all the time. And then this was just a pattern that was already happening. So you need your third eye open for that. Red, green, 3 slanted red, red, green, 3 slanted red, previous resistance to react to support. Next 30-minute candle after the 3 red candles slanted to the red is going to be bullish. Buy calls towards the previous lows, add into the previous crack. If it bounces and turns that previous low into support, add into winners, add into winners, add into winners, add into winners, which is why I was adding into winners as well. So if you're serious about making money with us and trading alongside with us, it's the first link down below within the description. Like I said, we actually give you the opportunity to become self-sufficient, and we give you the opportunity to make money before you join the group, right? So if you're getting results and it's been working out for you and you do want to join the group, then I would encourage you to fucking join. But if you're not taking any action, if you're not executing, if you're not becoming self-sufficient, then we're really not looking for those types of traders, man. If you just kind of want to just blindly come in here and you don't want to try to experiment and gain experience by trading, with what it is that you're learning, then this probably isn't for you. Like I said, man, we're looking for people who are actually taking action, making money, using the game plans, using the strategies that it is that I'm teaching you. You should be improving your trading and you should be becoming self-sufficient. If that's you and you're interested in joining the group, then I would encourage you to join it. And if you don't want to join the group, then that's completely fine too. As long as you guys are becoming self-sufficient in using what it is that I'm teaching you and you're getting results and it's improving your trading, then that's what you should be focused on, man, is becoming more self-sufficient and becoming better. Like I said, within the chat, it helps increase self-sufficiency as well, because you get to see exactly what it is that I'm doing. Like, this is a great situation where I created the plan and then you get to see me trade the plan in real fucking time. You get to see, oh, this is exactly where he's in on the trade. And then you can look at the chart and, just by in terms of what it is that I'm teaching you within these videos, you should really start to see in terms of the patterns that I'm seeing on the 30-minute chart. And then I explain it to you as well, and we break things down. So it's the first link below within the chat. If you want to join the group and trade alongside us, I can assure you we're going to absolutely crush it tomorrow. The market is setting up for a phenomenal trading opportunity on call options. In terms of puts, just the higher levels, 584 and 586 will be the levels for puts. With that being said, I'm going to be signing off